It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by TradingTips.com.
Welcome to this TradingTips.com video newsletter. In this episode, we'll be looking at the advanced decline line, a market indicator that confirms trends and predicts reversals. You will learn what the AD line is, how it's calculated, how it can be interpreted, and lastly, how to add it to your own charts. So without further ado, let's begin. The advanced decline line is considered a breadth indicator, in that it measures the breadth of trends. If the market is in a bullish trend, is the trend widespread, with many stocks participating? Or are there just a few market leaders that are doing the heavy lifting? The advanced decline line can tell you, and it does this by looking at net advances, which are the number of stocks gaining on a particular day, minus the number of stocks that have lost ground on that day. Obviously, if more stocks gain than lose, net advances is a positive number. And if more stocks lose than gain, net advances is negative. The advanced decline line starts a particular day in the past, and then tallies a running total of net advances from that point forward. Here's an example of advanced decline data, which shows how net advances and the AD lines are calculated. The data starts on April 15, 2010, when there were 1,456 advances, stocks that went up, on the NYSE, and 1,549 declines, that is, stocks that went down. 1,456 minus 1,549 equals negative 93, which is the net advances value. Since this is the first date of our data set, the AD line begins at negative 93. However, when the following day's net advances come in at negative 1,899, this is added to the previous value of negative 93 for a new AD line value of negative 1,992. And then, when net advances are negative 356 the following day, this is added to the running total of negative 1,992, etc. The advanced decline line is used as an overlay for the chart of the index or universe of stocks it is considering. In the previous example, we were looking at advances and declines on the New York Stock Exchange. So here we've put the AD line on top of the NYSE's chart. The idea is to see how the AD line compares to the actual price movement of the exchange. If the exchange is hitting new highs along with the AD line, then the trend is confirmed. If it is hitting new lows along with the AD line also hitting new lows, then the bearish trend is confirmed. However, the AD line can also predict reversals. If the exchange is hitting new highs, but the AD line is falling or remaining flat, this is a bearish divergence and can predict a downside reversal. What this means is that there are only a few stocks doing the heavy lifting for the market, and this is typically not a sustainable scenario. Similarly, if the exchange is hitting new lows, but the AD line is advancing, then this is called a bullish divergence, which could be predicting a recovery. It should be noted that although the initial date, in this case April 15, 2010, of the AD line affects the numerical values of subsequent AD line values, the shape of the line is unaffected. So if we started the chart 2 weeks or even 2 years earlier, the values on the sidebar would be different, but the shape of the AD line would not, and the values on the sidebar would be scaled appropriately. Thus, the starting date for your AD line calculation only needs to be as far back as you want to look. 3 months, for example, if you want to look at a 3-month chart. In the previous examples, we had been looking at the NYSE, but advanced decline can also be applied to the NASDAQ, the American Stock Exchange, the Canadian Stock Exchange, or the Toronto Stock Exchange. The appropriate tickers are listed on this slide. Obviously, those trading American stocks would want to ignore the final two, and in all honesty, the NASDAQ and Amex should probably be avoided in all but specific cases. The NASDAQ, for instance, has much less rigorous listing requirements than the NYSE, and this creates a long-term downward bias in the AD line. Stocks that are delisted remain with the calculation, so the longer the term, the greater this bias, which can lead to some inaccurate and misleading readings. You can add advanced decline lines to your charts on StockCharts.com, but the process is a little tricky. First, you need to enter the symbol for the net advances of the exchange you want to use. Those symbols are listed on the previous slide. Next, change the chart type to cumulative. Click Update and this will create the AD line. But to add the underlying index, you need to select Price under the Indicators menu and enter the index symbol under Parameters. And select Behind Price for positioning. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system, the First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. View more Trading Tips videos. Visit tradingtips.com. Sign up for our free video newsletters and become a successful trader today.